So you have found yourself a job, you have set aside your emergency funds, and you are looking to get yourself covered with some insurance. So let me give you 5 simple tips before you buy any insurance. So the first tip is to never rely on your employer's insurance. If your company has its own insurance, then that's great. However, don't rely too much on your company's insurance because eventually you will leave your job. What happens if you rely too much on it? Let me give you 2 scenarios. Let's say if you are healthy for the 40 years of your career, and maybe when you retire you are about 65 years old. At age 65 years old, if you want to buy insurance again, it's going to be really expensive. Okay, let me give you the second scenario. Let's say you get hospitalized during your career and you manage to claim 100% from your employer's insurance. In the event that you lose your job, you will be exposed and you may not be able to get covered again due to pre-existing conditions. So it's always advisable to have your own personal insurance on top of your company's insurance. The second tip is to know why you need insurance. First, you have to understand your own purpose of buying your policy. Then you have to understand the purpose of each type of policy and see whether this particular policy matches your need. The third tip is to know how much to be covered for. Understanding the potential needs of your beneficiaries can help you better decide on how much coverage you need. Don't just follow any rule of thumbs that you may have read because your need is specific to you. So your decision will depend on how much money will your dependents need each year and for how long. And because your children and your elderly parents are different ages, that number is different for each beneficiary. The fourth tip is to shop smart. When looking for insurance, your number 1 priority should be finding adequate coverage, like the type of plans you need and the amount of coverage you need. Next, then comes the budget. Price is important, but you'll want to determine what type of plan you need first and the type of coverage you need first. Then you can shift that coverage down to meet your budget. You may be tempted to choose the insurance with the lowest price tag, but if you do not have enough coverage or the right type of coverage, you will see less financial benefit when it's time to claim. My last tip is to start early because it is cheaper when you are young and healthy. Remember this, the older you get, the more expensive it will be. And if something unfortunate happens to you during the period that you're not covered for, you and your family will have to bear all the costs and literally pay the price of your actions. So if you have a stable stream of income flowing in and you have set aside your emergency funds, it is time to start insuring yourself today.